And here's the biggie when we talk about what changes we have and what's going on: the housing allowance. The housing allowance is definitely a unique aspect of the ministerial and clergy tax rules. The housing allowance, the way that it behaves, is it is non-taxable for income tax purposes, but still has to have self-employment tax determined on it. So that's when we were saying we don't want it added into that box 1 of the W-2 because that controls the federal income tax and the state income tax. But we're still going to have to make sure and it gets added in for self-employment tax calculations. It also can be a parsonage allowance, and that's considered at the fair rental value of the home. So if they're given a parsonage instead of having to, pay their own rent or mortgage somewhere, then it's the fair rental value of that gets added in, not for federal tax purposes, but for self-employment tax purposes, is that fair rental value. Plus any utilities, or it could be a cash payment. So some churches will choose to give a housing allowance, like a cash housing allowance to the minister, and it won't be subject to income tax purposes, so federal and state, but they still have to add that into self-employment. And it's exempt from income tax just for the extent that is actually used for qualified housing costs. So if somebody had a very, and not that this is the case I've ever seen, but a very generous, you can say, housing allowance, but they aren't using that all for qualified housing costs, well, it's only going to be exempt for income tax purposes just up to the level of what they're using it for those qualified housing costs. And just a little bit of an off-topic item, as we're talking about that parsonage allowance, I wanted to throw this thought at you. What if a minister was required, it wasn't optional, but they were required to live in the parsonage? Well, here's how it changes just slightly, because that could be considered at the convenience of their employer, because maybe they're supposed to be available all the time. So if it's at the convenience of the employer, then it isn't included. It's the same as any employee required to live on premises in a home provided by an employer. It's not added into housing or parsonage allowance. I just wanted to throw that out there because that's kind of a little, you can say, an exception to our rule. Is that a requirement or is it an optional thing? So that's how when we look at parsonage and allowances, is that, just treated the same as an employee required to live on premises and a home provided by the employer at their convenience. So it's a little bit of a sometimes exception in that regard. As we look more into the housing allowance, then first we have to say, okay, watch again those church-prepared W-2s. We see that commonly can be the case, unfortunately, where they go ahead and incorrectly include it in box 1. Some may go ahead and put that in that box 14 as an FYI, and that's okay. That can be very helpful, actually. Because if it's not included in there, you got to have your pastor find out that information. Okay, how much was your housing allowance? How much were you paid? You have to have them find that out if it's not included in box 14 as an FYI. So what exactly is included when we look at a housing allowance? We said where you can take it as, not taxable for income tax purposes up to the extent of qualified housing expenses. So what are those qualified housing expenses? Well, repairs and maintenance. So that can be painting or plumbing, electrical, light bulbs even, brooms, and cleaning supplies. So it's a little more extensive than what we usually think of in the world of repairs and maintenance, because it includes cleaning supplies, it includes light bulbs, brooms, etc. Utilities, that's most often when we're thinking in tax definitions, pretty self-explanatory. It's heat, electric, water, and sewer, trash, cable, internet, and phone. So all these areas are comprised in utilities. It also includes furnishings, and this is one that often is surprising to most because we don't normally think about that as part of housing in other definitions. But as it relates to the housing allowance, appliances and furniture and drapes and curtains and rugs and decorations and linens are all within that world of furnishings. Those are considered, when we're saying of that housing allowance used for qualified housing costs, this is still a qualified housing cost. And then also lawn care. So it could be a lawnmower or grass seed, fertilizer or irrigation. These are all categories within our housing allowance as far as qualified housing costs. We have other ones that are kind of more self-explanatory. That's going to be rent and your mortgage payment and Sorry, I'm going to pause for a second, Jeff. One of my slides might be missing from here for whatever reason. So I'm just going to read it. We also have other more logical types of qualified housing expenses. That is going to be your rent or mortgage payment. It can be down payment on a home, believe it or not. That's part of your cost there, but it's not a home equity loan unless that home equity loan is used for improvements. Refinancing costs are allowed if it's for an acquisition debt. You can also include things like insurance on your home and the contents, the real estate taxes, the remodeling expenses, and then you may have, repairs, all these other things that go along with it. So if you think of what we think as normal, housing costs, the rent, the mortgage payment, don't forget the down payment, refinancing costs, the insurance and real estate, and remodeling expenses. That can be a definite different one that we're not used to thinking about as those big remodeling expenses potentially. So all of these that I just listed, all of these utilities and furnishings and lawn care, repair, maintenance, of course the rent or mortgage, and then down payment, refinancing costs, real estate tax, all this, when we're looking at that housing amount they're given, those can be considered all qualified housing costs. So it's only in excess of that you end up saying, okay, now I have some taxable income. So that's just something to think of, as we have to understand what the definition of all those allowable costs are, because then that helps to drive what is taxable and what isn't. So as we're, going back to that, we have an idea now of what those allowable housing costs are. We have to say, okay, what does that affect? It is free of income tax, but we can't forget it still is going to be subject to self-employment tax. But the way to make that happen in a housing allowance is it has to be established in writing that this is a housing allowance given to the pastor or clergy member. It has to be established in writing in advance by the church. And it has to be paid by the local congregation. So what we mean in that sense is, let's say you have a group of churches and like the main group, they make that determination. It has to be paid by the local congregation of where they're actually putting their time in. So the local congregation is the one that has to make the designation. It can't be done at the group level. So even if this allowance exists under a parent congregation, it has to be the local one making that designation, and it has to be done in writing, and it has to be established by the one that's actually paying them as well. So the one that's paying them, the local level congregation, is the one making that determination in writing. And it has to be done prior to any of those housing allowances being paid, or it wouldn't count as such. So how in the world do you calculate that amount that's free of income tax then? Well, we have to first determine what amount of that is the allowance, certainly. You have to say, okay, I got to look at the fair rental value, if it's a parsonage, or not. What is the value of the home? I'm going to add in the utilities. I'm going to add in the furnishings, and then any additional allowance like utilities, all those items that we talked about on those previous slides. We're going to look at that whole amount. What is the exempt amount of that? We're going to look at actual costs. And that's where we look at the fair rental value, utilities, and furnishings, if it's parsonage supplied, or your actual costs if you're the one paying them. You're going to look at and compare what the allowance provided versus your actual costs or the fair market value of those. So we're going to compare the two basically. You're going to look at what that allowance that was designated in advance by the church is, because if they didn't designate anything in advance, you really would get none of that, because then you would have none that qualifies. So these are determining the amount that they were given versus, okay, how much of that you can exempt, and it's the lesser number that you get to use. So I want to give you maybe just a little bit of, to make it easier, some examples here. So I know that I don't have them written out here, but I want you just to kind of follow on. We're going to try to use some even numbers in this. So we're going to say Reverend Smith is a full-time minister, and he's living in a church-supplied parsonage, and he has this church-supplied parsonage has a fair rental value of $24,000. They pay him a salary, and they give him, let's just say, $58,000, but $8,000 of that is utility allowance. So we say, okay, he gets an $8,000 utility allowance, but actual utility expenses were $7,000, less in actual expenses than the allowance. So if you're following kind of so far, if you're making some notes, how do we figure what's taxable? Well, we look at the total amount received. So he gets a church supplied parsonage, but it still has a value of $24,000. So we have to add that in there. We add the utility allowance in there. So gets $32,000 of allowance. Okay. What we're going to do from there is we say, all right, we get that. We know we have some allowance of $32,000. We know we have salary of $50,000 out there, but what do we do with that extra? We have $1,000 extra utility allowance over and beyond what was actually spent. We have to add that into the taxable income. So normally what you can do, you can add that onto line 7, that taxable wages area. And that's an area you can notate that. You could put it on line 21, but line 7 is what is appropriate. What you're going to do is that allowance received amount, you're going to have to know, first of all, that that's designated in advance. If that whole, $32,000 is not designated in advance, you don't get to take that off income taxes. So that's how it works on the federal tax side. Okay, we get that. We have about $50,000 of salary and about $1,000 extra allowance that just wasn't used for costs. Okay, we got how that works. For self-employment purposes, you got to do it all. You got to do the whole $50,000 plus the $8,000 utility plus the $24,000 parsonage allowance. So your income for self-employment purposes is actually $82,000. It's a completely different number because on the federal taxable side, we don't have to count the portion that was designated properly in advance for housing. You're like, well, that, they were just provided a parsonage, and that's correct. You have to make sure it's added in for self-employment tax purposes. So I know that was just kind of, jotting that down on the side, but it is to help you kind of know, okay, I kind of am following this. And by the way, that W-2 that we talked about, how should that be reported properly? What should that read? Box 1 should only be the $50,000 of actual salary, and then they can do an FYI in box 14 and put $32,000 if they want, which is the parsonage value, the fair rental value of the parsonage plus that $8,000 utility allowance. So that's what that W-2 would read if we were looking at that side of it as well. So we're going to keep bringing this home, so don't worry too much if you were lost in grabbing some of those numbers. It was just to help illustrate some of that a little bit. So we're going to look and say, okay, let's think a little further in this. What happens when we're looking at that whole federal taxable part of the picture? How does that work for earned income tax credit? Actually, it does qualify for those purposes. They don't want to have them take an extra advantage if they're receiving that value, even though it's not taxable specifically for income tax purposes. It gets added in for earned income tax credit purposes. It also qualifies as earned income for retirement. So it is all earned income for those purposes, but it's just that we're exempting it out for income tax purposes only. So what about retired ministers receiving a housing allowance or parsonage? Is there any difference in there? You probably know there is because I'm making a note of it. But those retired ministers, if they receive a parsonage or some sort of a housing allowance, they don't actually pay self-employment or income tax. It's a little different if that minister is retired or if they're active. If, of course, it's based on past services performed, then they don't have to pay that self-employment tax or income tax on that allowance. However, if it's their widow, it doesn't apply to them. It's basically for the one who was performing the services in the past. Unless that widow at some point performed ministerial services too, then they don't have the ability to not have to pay the tax on that for the retired minister. So here's where it really becomes different. We have a recent court case, the Freedom from Religion Foundation. So it's been kind of a little bit of a turmoil right now. Originally, the judge held that a tax-free housing allowance for ministers is unconstitutional. And enforcement for the IRS side was just stayed right at that moment, pending an appeal that was in the works. So that meant they weren't going to enforce that just yet, that they were going to continue allowing the housing allowance until it was decided on. So the IRS actually appealed that back in 2014, and they won that appeal. However, in 2016, the Freedom from Religion Foundation refiled that suit in April of 16, and this is very recently. This is just, a number of months ago. They did receive a decision in October of 17, and they prevailed, and it's determined to be unconstitutional again. So it was determined to be unconstitutional. IRS appealed it and won, so it was back to being okay. And then they refiled, and now it's back to being unconstitutional. So in April of 2018, over 5,000 pastors got together and filed an appeal against that from their angle. And right now, because it's still an appeal, we don't have a change yet in regulations until that appeal is decided. So we're not exactly sure what's going to happen with that case. But what could the future hold? If it is determined it is definitely unconstitutional and they lose that appeal, then everything that we were talking about in these past few slides, that's completely and dramatically different. It could affect church budgets, because now the churches may have to change, what they're paying out to give the pastor a little extra to cover the income tax portion that's going to be inevitably on there if it doesn't win an appeal. So it's definitely different how we treat it as tax preparers in the future, and every aspect of that. When we're talking about the W-2s, the taxability of it, this is all up in the air until that is decided. So at some point we will know. Right now it is a curiosity as to what's going to be held in the future. So that's a lot about the housing allowance. That is one of the most unique aspects that affects our pastors and our ministers and our clergy folks. That is one of the very, very unique aspects of, we talk about a housing allowance. It doesn't exist in other forms of tax, certainly. So becoming familiar with that is important. Even with the prospect that it may go away in the future, we still have to deal with it right now and anything in the past until it's decided.